Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 29, 2026, and we're diving into Mastercard's latest earnings report for the fourth quarter and full year of 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Mastercard's performance, especially given their impressive results this quarter.
Revenue and profitability overview. Let's start with the top line. Mastercard reported a net revenue of $8.8 billion for the fourth quarter, marking an 18% increase year over year. John, what are the key drivers behind this growth?
Absolutely. The growth in net revenue is primarily driven by a 7% increase in gross dollar volume and a 14% rise in cross-border volume on a local currency basis. Additionally, their value-added services and solutions saw a robust growth of 26%, which significantly contributed to the overall revenue increase.
And how about profitability? The adjusted EPS came in at $4.76, beating the analyst's forecast of $4.20s. What does this tell us about Mastercard's operational efficiency?
This is indeed a strong indicator of Mastercard's operational efficiency. The adjusted operating margin improved to 57.7%, up from 56.3% in the previous year. This margin expansion reflects their effective cost management and the benefits of scale in their operations.
Strategic initiatives and market position. Mastercard has been executing several strategic initiatives. Can you elaborate on how these have impacted their market position?
Certainly. Mastercard's partnership with the Apple Card has been a significant success, driving consumer engagement. Their value-added services, which include digital and authentication solutions, grew by 23%, showcasing their ability to innovate and meet market demands. Additionally, the 14% growth in cross-border volume and 10% increase in switch transactions highlight their strong market position and the effectiveness of their global network.
Operational efficiencies and future outlook. Let's talk about operational efficiencies. Despite a 10% increase in operating expenses, Mastercard has managed to maintain a strong operating margin. How have they achieved this?
Mastercard's ability to maintain a strong operating margin despite rising expenses is commendable. This is largely due to their strategic cost management and the benefits from new government grants. Moreover, their effective tax rate increased to 16.7%, influenced by the global minimum tax rules, yet they still delivered strong net income growth.
Looking ahead, what can investors expect from Mastercard in 2026?
Mastercard is well positioned for future growth, with a focus on innovation and expanding their value-added services. Their recent share repurchase of $3.6 billion and dividend payments of $684 million reflect a commitment to returning value to shareholders, which is a positive sign for investors.
Key takeaways. In summary, Mastercard has delivered a strong performance in 2025, with significant growth in both revenue and profitability. Their strategic initiatives and market position set a solid foundation for 2026. John, any final thoughts?
Mastercard's robust financial health and strategic focus on innovation and partnerships make it a compelling investment opportunity. Their ability to adapt and thrive in a dynamic market environment is impressive.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Mastercard's performance in the comments below.